And we are live. Welcome back to the Crypto Kingdom. This is London. We are going to be covering today Harmony One. That is the focus of our channel. I hope you guys are having a great weekend, and we certainly are here. We've been going through the consolidation of Harmony One. Now, first of all, if you guys are not subscribed, please turn on notifications. This is the channel to come to, okay? It's the channel to come to and receive notifications when anything is happening related to Harmony One. We do cover other coins, other altcoins, Bitcoin, etc., mostly as they relate to Harmony One. So let's dig into the charts a little bit now. Go ahead and hit subscribe for all of our loyal subscribers who are returning. Congratulations, guys. We're making some good money. You guys know that. Let's see. Let me go ahead and plug in. Let's do a kind of a check real quickly on the tech. Let's get on the tech real quickly. Where are we at? Where are we at? Need to make sure everything is set up and rolling. Okay. Let's see where we're at. We have about 21. Welcome, guys. Welcome. Nice to see you guys. I want to talk through the update is kind of the critical launch planning. Okay, let's get a little more serious. Let's turn off the music. A little bit of intro music was fine. And let's see where we're at. All right, we have been going through kind of an accumulation phase with Harmony One. We have literally called this accumulation pattern in here and around this. What we're dealing with is the Fibonacci levels. Okay, these are pre-scheduled. Okay, mathematical calculative levels. Okay, dealing with this recent 30% gain that Harmony went through. Now we called this exact entry point. We were able to deliver that ahead of time. Real briefly, okay. While we are waiting for Harmony One to regain steam, okay, and it is on a periodic schedule to where we are planning for a rocket launch. Period. That's what we do. The rocket launch is essentially an upward trajectory, a rapid, okay, high velocity event. Now, velocity of a price means the amount of price change within a specified duration. So this has a high velocity here, okay? We're very technical on this channel. We like to teach people about technical analysis and fundamentals of trading. So that's what we do here. So let's look. Here we were able to deliver the precise entry point. Now that it has gone 30% to the upside, some people got as much as 50% on this one play. Okay, within the previous 2 weeks here, there were two 30% events, multiple 10% events. Literally, some people have doubled their money in the last 2 weeks. Now, there are some other hot coins right now. I'll tell you that, some other hot investments. I don't know any of the big guys that have doubled their money in the last 2 weeks. So let's see what the next major event is. The next major event. When can we plan to kind of... We need to have a lesson later today, and we will. I'll cut another lesson tonight on taking profits. We'll get into the taking profits, assuming that this does meet a positive kind of a price support, wherein it supports a positive price action, if I can get it out, a positive price action or positive price action event. Easy for me to say. Assuming we meet that in short order, okay, we will need to discuss what is the schedule or what is the approach on taking profits. I will let you know right now, as a matter of fact, the average interval on Harmony One has been roughly, I'm going to say approximately, and I don't use that word unless there's been some calculations on my end, approximately a 30% gain. There have been a few instances in the past that have beat those odds or that have been kind of outliers. The average gain is in and around 30%. So if you're looking at a target for a profit-taking schedule, if and when this does launch, okay, 30% is in line, okay? It's in line with the previous nature or the previous character of the price action that we have reviewed extensively here. You guys let me know in the comments how you're doing today. It's good to see you guys show up. And let's review what we see in terms of the immediate price action. The current price is under 15 cents. That is fine. That's on the 4 hour. Let's go down to the 1 hour and see if we can take a little bit of a closer look. We did see a little bit of a flat line here, okay? A little bit of a support. That's precisely what we anticipated. For those of you who have been following in a detailed manner, we did anticipate here a little bit of a break. Now, this is telling me, we have talked about the structured levels or the increasing level at which one should accumulate within this Fibonacci pattern. Now the Fibonacci, it's a scheduled tiered, first of all, a scheduled tier approach at probabilities or proportionality. Okay, that's just it. These are literal ratios. Literal ratios. Okay, 0.618 typically represents what is called the golden pocket. 0.618 to 0.65 is the golden pocket. Why? Because this ratio is used more frequently within structuring, okay, the positive structuring, the growth of an overall price action, okay, in the overall market. As you statistically look back at at say any price action, guys, these are built within the programs. They're built within the framework in terms of these levels are built within the framework of the markets. So the fact that we were, for instance, on this first line able to literally lay this out, that this would be our first level of accumulation. Look at this line. Look at the consistency here. It's phenomenal. Okay? It's literally a phenomenal event that there was 1, 2, 3, 4, 5 touches. This is a level of support. It's indicative of an incredible amount of buying, okay? At least a consistent amount of buying that's going on at this level. Now, as it goes down, we are prepared to double down, okay? More orders go in at this level. Now, what does that mean? Well, a lot of people are consistently afraid of, and they'll operate their trading philosophy behind, well, if it has gone up, it may go up more, and we need to get in heavy as soon as we can because we don't want to miss the upward trajectory. Okay, well, that's one approach. The other approach is trying to get a good price, trying to make sure that you lower your cost average. Okay, lower, and that's the amount of money that you're paying per coin. So those of you who want to make 30%, you understand that you're going to need to get it at a price, get Harmony One at a price where you can actually achieve a 30%. If you're buying in high and it continues to retrace, which is a normal pricing event, it's a normal phenomenon. Okay, that's a normal pricing phenomenon, this retracing mechanism here. If you're getting in too high, you guys know if you buy high and sell low, you're not going to make any money, unfortunately. Even if it were to go to an upward trajectory, your trajectory. Today, I don't know, I'm just tongue twisted. You guys need to help me. Maybe shout out, what can we do for a tongue twisted guy at the helm here? Not sure. Maybe we're just tongue twisted, not sure. Maybe it's Saturday. We're not supposed to be doing this too much. We were up late last night talking about the accumulation levels, but I'm not sure if you guys have ever been tongue twisted. Just one of those days, guys. It just happens sometimes. So appreciate you guys staying loyal. And give me a shout out in the comments. Hopefully you guys are doing well. To get the information out, our next level of support that we would anticipate being key, is this, and as we give you the exact figures here, you know we're very precise, is 0.1449. So that's 14. It's right at 14 and 5/10, 14 and a half cents. So that's going to be the next key level wherein we are expecting to see a higher level of accumulation. Now, why? Independent of what we say here, independent of that, okay, independent of an opinion, the calculations, the exact calculations that deal with the structured nature of the market and price action, the exact calculations, not my opinion, the exact calculations place some degree of activity at, this 14 and a half cents. So I know that there are orders to some degree right now at 14 and a half cents, that is kind of a key ratio that people will look to. Now, as you look as to whether or not that will hold, as you decide, is that an area for you, understand the larger dynamics in play right now. Okay? There are individuals focused on Harmony One. Right now, there are some other players in the market receiving some attention. Okay? We mentioned XRP, and I'm glad you guys have waited through this. Sorry about the tongue twisting, okay? XRP, okay? We're still bullish, big time bullish on Harmony One. While Harmony One has been retracing, okay, and we are accumulating more at these lower levels as it goes down, we have been looking at XRP. We brought you something relatively detailed on XRP in and around, 80 cents? That was 4 days ago. Yeah, it's pushing $1.40. Okay, so you'll soon be at a 2x on XRP after our initial video. And what we covered was the 2018 price action on XRP. XRP has a lot of room to grow. That's just an example that I'm bringing to you so that you can understand as we are accumulating this and looking for an upside potential, there are other players in the market that are attracting dollars. And I won't say, I'll tell you, the crowd at Harmony One is one of the most loyal, straightforward, positive communities that I have been a part of. So it's an extremely focused group. We're very focused here at the channel. When I'm not tongue twisted, I'm sorry about that. But I do bring up these other investments because you need to understand the dynamics of, well, why wouldn't this hold? What would be the scenario? What would be this scenario when we wouldn't see this golden pocket? If it's a golden ratio and it's critical for the growth, what would be a scenario under which it would not hold? Well, it might be a scenario when there are some other hot investments and individuals, let's say they just decide, you know what, Harmony One might not be for me right now. I'm going to go ahead and play this because I believe I can make 50% in the next few days over here in XRP. Okay, now that's a dynamic you need to understand from a functional kind of educated approach, being an investor, or I won't call you a trader. If you do decide to, if you're a day trader or you're a holder, a lot of you are just in it, you got in at 2 or 3 cents, you're happy to hold, that's fine. Maybe you don't consider yourself a trader. We get into some advanced principles. We were up late last night. That's probably part of the reason why my body and mind is kind of like, are you serious? You want to get into this again? We just went through this. So we had a good time last night. We covered some key, crucial information. Now, as we look at this, that's one of the reasons why, and I'll point that out as a fact, it's one of the reasons why this level could not hold. Now, if this level does not hold, I would expect and anticipate additional orders going in here, just like we just saw here, additional orders, okay, going in at the, let's see, is that at the 50% retracement in and around this level at the 1506, almost to the T. So we'll anticipate seeing additional orders, additional accumulation. Okay, why? Because we're bearish. We're believing that this is going to go up, and we're at least planning for the contingency that if it shoots up again another 30%, we want to be involved in that price action. Given this consolidation range, which is phenomenal, this is one of the strongest consolidation ranges that it has had after we drew the Fibonacci's in, a level of support wherein there was an accumulation going on. Understand, there is a possibility that it decides to ramp up sooner. Now on a frequency, I'll say on the frequency analysis, meaning the duration, okay, the frequency or the duration, which we would expect to wait. That we would expect to wait before we see another critical price action event to the upside. That frequency duration, okay, is a bit compromised, and I'm just going to explain that. It's not a negative thing. It's nothing negative to be afraid of what's compromised. If we look on the whole at the previous frequency durations, and all I'm saying there is the amount of time that needs to pass in terms of days or hours, okay, in which we have expected to see a positive price action. The frequency, within which frequency or what frequency, how long are we having to wait until we see another positive price action? Okay, that has been, and when I say compromised, I would just say it has been changed. Okay, it has changed in and around this period of time. We have still seen positive price actions within those time frames. However, they have not been as significant. The magnitude of those price changes has not been as significant. That's normal. That's this retracement pattern here, which has lasted, why don't we pull it out exactly? The typical time has been anywhere from, and I have put the pencil and paper together for you guys so that you would know this. The typical durations have been up to 3 days, 2 days, 1 day, 3 days, 2 days, 2 days. We've gone into that mechanism throughout this entirety here. So we're looking at 1, 2, or 3 days, essentially, during the initial push wherein we received a 20-time return on Harmony One, on money invested in Harmony One. That's a phenomenal frequency duration. That's that's quick money. People like that. That's extraordinarily bullish. Now, it's difficult to maintain. Why? Because people start to make so much money that our holders, they literally They're like, we have enough money. We need to buy a boat. One guy wants to go buy a boat and go fishing. I understand. You want to buy a boat. Great, you know. Other people want to get in on the price action. It's part of the normal flow here as we go forward. Let's measure out the new so that you guys can. We want to answer the question: when reasonably should we expect a positive price action? Okay, because we're seeing all the green on the board now. Should it attract us over there? Well, let's look at the facts. Okay, let's go ahead and measure. Now this will measure the duration up until now. Okay, that was 9 days. Now since this peak ended around March 28th, this is a 9-day wait. Now in between that 9 days, at about 5 days, we had a positive price action of 10%. I believe people traded that. It was right on our level of support that we identified, 10%. If you had $10,000 and wanted to play into it, you made $1,000. Easily, let's say easily, bam. Okay, that is about at what? At about 5 days. Then we had another pricing event at 7 days. I'm bringing that up because in the frequency in which we're saying it's all been down, there have been tradable events where people have been making 10%. The character, okay, the overall character of the trend has changed to that of a retracement. That's not negative. People say, the holders say, well, we want it to go up. Well, it needs to rest. Okay, there is a positive pricing dynamic that is just it's built in with the mathematics essentially. As we look at the Fibonacci's, every single trading program that you see, every trading program has Fibonacci retracements for a reason, because they're used. So all of this information you see on the screen here, this is part of the price action of, I'll say this, the price action of everything that's traded. Literally, it's part of the price action of everything that is traded and has a variable price component to it. That's just it. It's a fact. So people say, well, we don't want it to go down. We don't want it to retrace. Well, welcome to trading. Okay, welcome to the real world. This is what occurs. It's not negative, and I'll explain why it's not negative here in a moment. So as we look at the frequency duration, we're looking at 9 days that people had to wait for a positive price movement, okay, positive price action. Now, within that, recall, within 2 days, people made 10%, got in quickly at a support level, and bam, made 10%. This was identified, okay, and I need to explain this, okay. This level right here was identified prior to it showing up. So we had identified with the Fibonacci this level of investment. People got in, made 10%. All right, we're expecting a big news event. We did not get that. We did not get that here. But in and around this time period of 2 days, again, 2 days, I read out those frequencies to you. The previous frequencies down here, the time it took for some big price action to occur, okay, we're looking at, initially it was a day and 8 hours to be specific, okay, then 3 days, 2 days, about another day occurred, then 3 days, 2 days, 2 days, okay, so we're at 2 to 3 days is the average, okay, in that. In and after this one, let's see, this positive price action on the 29th, okay, on the 29th, we have 2 days, we have a price target, okay, then bam, we have 10%, people decided to take 10%. Now, after that period in time, okay, are we still on the 2 to 3 days, or are we on a 9-day? Now that's critical. As we look at this, are we on a 9-day wait period? Everyone's like, please don't tell me we're on a 9-day wait period. That's why I'm going through the specifics, okay? After that period, okay, another 2 days, then you had another price target. People made 10%, okay? Then we stretch that on over about 2 more days. We had another positive price event. Now, these are kind of micro price events. It's during a retracement, all right? As we continue from an additional 2 days, then we get into another 2 days. So this is subdivided, and those are 2 point however many days. This is essentially subdivided into a period of time of two days, essentially. So that's a realistic time frame in which we want to look at for a frequency duration wherein we could say, it seems like the timing is telling us it wants to move. If you look to the left, it's small writing, but that's 2 days and 16 hours, okay, for the wait until the next price movement. This one here, Okay, let's do another one at the next level. If you can get right to here, let's get to the next level. Let's see that. So that's about 2 days. This one, well, about 2 days. All right, so that's been consistent. We're still seeing this, around a 48-hour lag before we see another positive price movement. And I don't recommend people try and trade Harmony One for 10% gains. You can, okay? It takes a sophisticated, I'll say it takes a sophisticated platform, first of all. You may not have in your handheld device the mechanisms, okay, the technology to allow you to trade for 10%. All right, some of you are holding. Okay, we love the community. Long term, we think this is a phenomenal project. Harmony One. We love our projections are phenomenal. Okay, look at our old videos. We are very bullish, as is the overall trend, as is the price action since the incipiency here. Okay, since the beginning, we have an incredible 20 times your money in a period of several weeks, guys. So this is one of the gems they talk about. Finding the gem. This is one of the gems. It's a top 100 market cap coin. Okay, and it has incredible ability to move to the upside. How do we know that? Well, recall, let's go back just a few days ago. Now, we did pinpoint this, and I bring this up because as you look at, well, I want to go over to a different coin, such and such may, I'm just unhappy. Imagine someone's, I'm just unhappy. I need a positive price movement. Well, why don't you consider one thing? We provided this channel provided the exact price entry point, the exact price target. Okay, you guys can look at the videos. Okay, it is literally on the Fibonacci sequence and it's pre-calculated. Okay, that's what made this, and it's right here. That's what made this extremely tradable. Okay, it's literally already calculated for you. So the fact that we can use the program and let you know the program's telling us all, and it's telling the entire street, hey, right here, in and around 12.8, right in and around 13 cents. We talked about 13 cents this entire time. All right. So the people who were waiting, okay, to enter at 13 cents literally saw up to a 50% return on their money. Okay. So it looks like, I want you to look to the right of your screen. These are very small right now, but it looks like XRP is doing phenomenally well. It is right now. It's at 30%. It's kind of the leader of the storyboard today. Guess what? So are we. Within the last 48 hours or so. Okay, we have just as strong of a price potential in terms of an overall move in the price action as XRP. Just as strong. Now, we are highly calculated, and I like the frequency duration with which we're able to study and analyze when should we predict, or when should we, it's one of those days I'm just not going to be able to speak very clearly. When should we be able to project or predict when the next price action occurs, when the next positive price action occurs? Thank you guys for your patience. You're very nice. So we've gone through the other events, 2 to 3 days, 2 to 3 days, 2 to 3 days. Okay. Now we've gone into a retracement. Okay. I do understand that Binance was limiting withdrawals. This sucker was hot, guys. This was a situation. This was a hotter ongoing financial concern than GameStop, period. Okay, so the channel that you're listening to, in spite of my difficulty in speaking today, we literally have been giving price targets for one of the hottest ongoing, it's an amazement to the financial industry, period. That's all I have to say. Those of you who are in it, you understand that. You've been tremendously profitable. We want to help you continue that. Now, as we're looking at the trading action, let's zoom in again. What we want to do is take advantage of two possibilities right now. There are two options. One is that we experience a positive price action during the retracement, okay? That's after we've experienced this positive spike in price, okay? On recently here, this 30%, where you're matched out on anything on the right-hand side, guys. You want to go over to XRP, anything else, you want to play that game, go for it. We're in the game right here with Harmony One, okay? On the 7th of April, okay? Today is the 10th, okay? Within the last 3 days, bam, 30%. Okay, some people that day made what? About 50%. You're not seeing that on the board right now with any of these other guys, with any of the other alternatives, okay? When we focus in daily and we really take a good look at the pricing targets and the built-in functionality of the entire trading system, okay, meaning the technology, i.e. TradingView, This is an advanced premium package of TradingView. Okay, so we're taking advantage of the built-in technology to give us pricing levels and pricing targets. Anyone can do this. You have to be trained. You have to train yourself. I have a background in finance heavily. Okay, so financial analyst when I was 22 years old over $1 billion equity fund. Okay, raising the money for $1 billion equity fund. So this stuff is very intuitive for me. It may not be for everyone. So in terms of using this technology, I'm very familiar with finance. I can bring those issues kind of to the forefront, which is why we suggest that you do turn on notifications, that you do subscribe. And most of the time, I'm much more eloquent than I am today. I had a good jog this morning. I always tell you guys I'm going for a run. This morning was a good run. Maybe I'm a little bit exhausted from the run. Beautiful weather today. Hope you guys are having a good weekend. As we look at this retracement, we're fitting it in, first of all, to a frequency duration. Okay, I'm going to state that as we answer the question, will we go to the upside or will we continue to break to the downside and try and reach this? And I say try because this is a magical level here, typically very highly regarded. And it's in the yellow, okay, this golden pocket. And I've been speaking about that. All it is the 0.618 to the 0.65, which is, guys, that's a percentage, okay? That's a percentage of pricing, okay, of a price retracement, pricing and retracement. That's it. It's that complicated. It's a 0.618. It's a 61% retracement in the price. That's all a Fibonacci tells you, okay? That's why I say they're calculated levels. I'm not doing the calculations. In the past, people had to do calculations. I would have had to do the calculations. We don't have to do that anymore, all right? We have a phenomenal program that we can look at that the entire street looks at. All the big traders are looking at. If you do choose to use it yourself, I would just encourage you to please be careful where you draw your trend lines. Please be careful which timing interval you are using, okay? Please be careful whether or not you switch into candles. Just be careful. If you are putting your time, energy, and money into something, make sure you understand the overall dynamics because there are nuances to it. And if you're not experienced, the technology will definitely can present some challenges. I'll just say that can present some challenges. So what did we want to do? We want to discuss the upward trajectory versus the downward trajectory and meeting this golden pocket area. First of all, we understand one thing. If it does go up here in a short order of time or extended order of time out of this trading range, and I'll say this trading range is defined by this most recent pricing. It's one of those days. Pricing action to the upside. Okay, so this is the frequency duration in and aligned with this recent pricing action. So as it retraces, if it goes up, we need to be involved in and around these levels, okay? You don't want to be involved at the high level, right? It doesn't make sense. You have a greater risk of what? And we've been discussing this. I'm glad that you guys have paid attention and stuck with us here because we did discuss last night, did we not? Absolutely we did. What did we discuss? The price was here. Now people saw it holding and thought, you know what? I'm getting kind of anxious. What if it goes to the upside? I said, no. You guys know that I said this. You know for a fact that I said this. No, in all probability, and this is why you guys pay attention. This is why you guys listen and suffer through these fantastic lessons we're all getting. This is for educational purposes. Okay, you know that I said that we can expect to go to the downside, that we would expect a further accumulation at this level. We got that. We got a little double touch here. That's fine. That's fine. Okay, I see that the market maker is willing to move this down. Beautiful. You guys will recall, if you want to watch, it was a good stream last night, but you will recall that we said we expect the price action to drop. Everyone's worried about, well, there's big news in the market today. Look at this, the brand new price of such and such. Okay, great. We do this every day. You guys know that who watch the channel. We do this every day, out every hour. We're literally telling you we would expect this, and then, yep, tuning back in, look at what has happened. We just have to wait a short time period. And then we can get back on and say, look, this did occur just like we had stated it would likely do. So we're dealing with the probabilities of calculated levels being achieved that are built into the market. I mean, it's very simple stuff, guys. It's very simple. So we are, though, accumulating slightly Slightly we're accumulating, and heavier as the price drops in and around this range. And tune in, because as this retraces within this range, okay, defined as, and let's just define it by the price, from 12.7, okay, to 17.2, as the pricing drops within that range of 17.2 down towards the 12.7, we are accumulating more heavily. Okay? Why? Because we want a better price and we want to match up with the probabilities. Now you're going to get into kind of a key probability here. This 0.61, this is typically defined as the golden pocket. Now we've done kind of a macro look. That's just a broad-based look. Okay, that's a very generalized look, and we've drawn the Fibonacci's. Guys, they're just pricing levels. That's it. They're just pricing levels. We've drawn out the pricing levels and the support. Okay, for the overall trend. You guys know that by now. Now we have drawn that on a smaller scale. On the smaller scale, okay, let's zoom back into where we were. On that smaller scale, okay, this is still a magical level. We talked about it being a magical level, okay, in and around down here for the overall trend. Okay, that is, and precisely we're looking at the 10.5, okay? We're looking at the 10 to the 10.5, okay? The 10 to the 10.5. What is crucial about one thing, I want you guys to notice this. Please pay attention. If you are trading Harmony, please pay attention, okay? As we look at the indicators right now and how that golden pocket on the downside may play out, again, pay attention. I'm going to show you the 20-day moving average. Okay, we have the 20, the 50, and the 200 on the screen. The 20 has been broken again. Why is that important? That does not seem to be a critical level of support. That's not a bad thing, okay? That can be a very good thing. Why? Because you're going to have to get through potentially, I'll say potentially, if the probabilities don't hold for this price range. Remember that price range, the kind of that we have the microscope on right now is the 12, about the 12.8 to the 17, okay? If that does not hold, we would have to get through the 50-day moving average, okay, to reach the golden pocket, okay, to reach this retracement level on the overall pricing action. You guys see that? Because that green line here, the green line, let's go ahead and max our view here. This red line, okay, the red line represents the 20-day moving average. We have just broken through that, no problem. We mentioned that already. Why? Because we already broke through it to get down to our price target. Okay, this was a big price target for us. Why? Because at that level, we had not only doubled down, we tripled down. Bigger money, bam, okay? And we double down at the different levels. No money on top, okay? We enter lightly, okay, at this level. And I'm talking on the retracement side. And we apply this, guys. We don't just apply it to the macro, to the overall trend. We apply it to each and every price movement. Okay, so on this, in and around, if you can see on March 20th, we apply a Fibonacci. I'll tell you, we applied a Fibonacci, and a lot of people, let's say a lot of people, all the market makers applied, all the market participants applied Fibonacci's in and around here. And they may have seen the actual, they may have seen the beginning of the trend around here. They may have done that, okay? Why is that important? Well, it really took this level, and let's pay attention, guys, pay attention, because it took this level, right in here we broke out, okay? We broke out of this pricing phenomenon. This is on, the pricing had already reached about the high here, right? Yeah. We began to, okay, escalate, move, okay, with high velocity to the upside. What is this? About 18.2, 18.6? The key is right here. And I bring up the 0.78 for a reason. Okay, this 0.78 is the level of retracement beyond what? Beyond the golden pocket, beyond the 0.61. Now that's a very nice portion of the chart. Everyone loves that. Okay, we look back at that. That was phenomenal. That was great. What did we do? We retraced to the 0.78. We retraced 78% of the value of this gain. So people want to know, okay, is this bullish? Well, this is very bullish in and around what occurred on March 20th, correct? Yes. Okay, this is a normal part of the pricing action. So as we look into what's going on right now, I want you to consider that Harmony 1 in the previous intervals, okay, these durations of time between the price action, it has already gone into this 0.78 down here. It's not unheard of whatsoever. Okay? Yes, we have this golden pocket, these golden ratios, right? But, do you want to get into these others? It gets down into the 0.78 frequently. So what we want to do is to maximize our gains, we want to increase, okay, the level of participation or the amount of capital involved at each level. Okay, and we take a small kind of let's just say the best, instead of a micro approach, we take kind of a magnifying glass and we get more detailed on it. Okay, as the price drops, we're willing to enter orders and enter at heavier levels. I don't want people to think that the 0.61 is the golden ratio and that's it. No, it's gone into, it can be surpassed, okay? It has been surpassed on some of the best moves on the pricing action that we see. So that 0.78 can be reached. Okay, that's our last level of support within this range. Now, if we, okay, let's assume we've got 100, it may be 1,000, you may add a zero here. If we've got 200, it may be 2,000, you may add a zero onto this. These are different levels that we're willing to invest along, and we're doing kind of a profitability approach upon the retracement, which is critical. Okay, while we're retracing, we're trying to make sure we catch the upside action and some of the trades like this for 30% along the way. So we are playing with a lighter amount of money. We will begin to double down as we get into the stronger green area, and as we get into the teal, we will triple down essentially, because we're going to double down on everything that's been invested. That's going to operate as insurance, okay? Because if this price action were to evaporate, I'm going to tell you, it's possible, guys. As possible as what we just saw with the Fibonacci over on the previous, what was that, March 20th levels, right? Yeah, and it got down to the 0.78. So on the macro view, as we look at the overall trend, yeah, you guys can see that can definitely occur, right? A retracement to the point. This is going to get you the 0.618. Or wait, what about the what if it wants to retrace? Yeah, you see, what if it wanted to retrace to the, yeah, I don't want to talk about a 0.78, but what if 78% of the value of this, if that's a normal expression of a positive bullish market? Now, everyone, you're not going to like to hear that, but you should like to hear the fact that, well, if it does that, we're going to probably be able to double our money between now and then, okay, or get close to doubling our money while that's occurring in this market. It's very different than saying, well, it's worth, it hit a high of 22 cents. Well, we're in at 22 cents. Okay, if you're in at 22 cents, you have to ask yourself, okay, this sounds very scary, right? It's an elimination of the value of your holdings, okay? It's just a part of the pricing action that it's already demonstrated, okay? After, it's going to take, it will probably take what it needs to take to reestablish its trend. That's the way I normally explain any kind of, I'm not going to call it a reversal, okay? It's a retracement. It's a normal part of the pricing activity, okay? Price action, okay? It's just a retracement. So as we look at that, it's going to take what's required in order for it to reignite, in order for it to re-begin kind of its or continue its bullish trend. So we're looking forward to that, and towards the mechanisms that can keep us in play. That's the bottom line, okay? So as we look at that, we're planning for the contingency that this does not ignite. Now it may, okay? It may decide to go off the rails at any point in time. We're more heavily invested on the levels as they approach down on and through this 0.78. You may have your own approach here. That's fine. I like a layered in, tiered approach, a double down approach, triple down with the heaviest amount of cash towards, towards the 0.78. With enough exposure at the 0.61, the golden pocket, I'm still in it. But the pricing action has already demonstrated exactly to me that there literally is I won't say a probability, there's a possibility that we fall into the 0.78. Okay, so as we look at that, let's let's just review that. If that is broken through here, we have no problem. We are fine. We have no problem. Why? Because, well, then we just march down to our golden pocket. With this double and triple down approach, first of all, you guys literally, we literally witnessed 300, we calculated last night about $500 million in terms of a swing in the value of the market capitalization. $500 million on a $1.5 billion concern. Okay, the entirety of this is about a $1.5 billion concern right now. We experienced a $500 million, okay guys, a $500 million on a $1.5 billion. That's a big swing. That's fine. But we were able to predict that. So I know for a fact if you were uninvolved and you are trading it, that you were able to capitalize on that if you're looking at our pricing targets. So we have kind of minimized pricing targets to plan for the trajectory on the upside. Period. It's a smart strategy to reduce your risk of buying too high, okay, and to make sense of maximizing your gains through entering a position at a lower price within this interval. That is as clearly stated as I could have said it. It's been a difficult day talking. I am tired. I went jogging this morning. I don't know if you guys are working out, but I went an extra lap or two, and I don't normally do that, so I will throw caution to that in the future. Remind myself that it affects you guys. Let's see what else we have. So as we look at these specific price targets, I have said this before, and it's good you guys are listening right now. I think that this is a crucial statement that I'm about to state. Okay, about to say. I have said previous heretofore that in and around this area, if you guys will recall, this was April 6th. Okay, I have said this, and I want you guys to hone in on this. All right, in and around, and this was in the green zone. Okay, just this layered zone. I'm not going to get into the probabilities, okay, or the ratios, percentages, but in this kind of second tier, we're involved at the top tier, this kind of pale green. Then the stronger green, we're involved heavier, double down. I told you there wasn't much that was going to stop the price in between. Please pay attention. In between. You guys will recall on April 6th, in between 15 cents and 12.7. All right, you guys recall that? Yeah, in between those pricing targets, I said that there wasn't not much that was going to stop the price fall. Now we got to the pricing target, our ultimate pricing target, and bam, we reached the level of investment heavily. We tripled down our money into it. Okay, then bam, 30% on that. But this area of drop is crucial because I want to compare that if the contingency plays out. And while we are accumulating within this trading range right now on the immediate price action event, while we are accumulating and planning for the upside, I want to play out the contingent that we go onto the downside and approach the golden pocket, the golden ratio for retracement. If we approach that ratio, what are we looking at in terms of in between the 13 and this golden ratio figure of 10.5? What do we have in the midst here? Well, I'm going to explain. Unlike, okay, please pay attention. Unlike this previous area, I want you to look at the previous price action on the left. Okay, in and around the 21st of March. Look at the fact that on the 21st of March, we have a very nice acceleration of the price. Okay, that's a strong increase in a short period of time, right? Nice acceleration to the upside. There's nothing there in terms of pricing activity except a nice, clean, smooth, let's say clean and smooth, accelerating price. Okay, that's it. That's it. As we drop down, or as we look at this next level down, if we compare, let's look to the left for history. Let's see how that wants to teach us, okay? As we look to the left, we do have something here. We have a lot of people that have bought and sold, and bought and sold, and bought and sold in and around this area of March 18th through the 21st. So within this teal zone here, as we're looking at this price drop and around here, well, now I want to know, that was a very quick drop. I said that this is going to be, there's not going to be much that's holding this up. And sure enough, we saw the market maker holding it up. We watched and we saw him holding it up. Okay, he was trying to push this around, trying to do something. There was nothing there. And you can see around here, there's just not much there. There's a few buy-ins around here, right? Yeah, a few buy-ins. They got out. If you understand the pricing behavior, the trader mentality, guys who got in here, bam, they're out. 30%. That's all they want. They want to do that 2-3 times. They want to do that, say, they want to do that 2 times with a few 10%, they're going to double their money. They want to do that 3 times, they're going to double their money. Okay, that's how the trading game works. They still love the coin, or else they wouldn't be involved in it. They're not gonna play with fundamental that they don't like or love. It's just part of the game. We support the holders 110%. We support the traders 110%. If you love technicals and you're a holder, congrats to you. If you just love the channel, congrats. It's a great community. We do have a Discord. I want to bring this up for people. We do discuss some of these issues and a lot more clearly than today. I apologize about any of the stuttering. That's no fun. I jogged too hard. I went to work on the track. I hope you guys are staying healthy. I want to pull in. This is the Discord address, and I'm going to put join Discord, okay? And I want you guys to go ahead and join because it's a really good group, and you will see the group that has been literally calculating out to 2x over the past 12 days. Okay, so I don't even know that like XRP or whatever the other fancy ones right now are really going to achieve that. So you guys make sure you jump into that Discord. Okay, and it's a good, clean environment. That's it. It's financial business. That's it. You can read the rules, but it's a very good environment with some professionals in there. I'm a previous financial professional. Okay, so that's just what that is. If you want financial advice, go get you a stockbroker. Go get in line. It seems like you guys want to be a stockbroker, so that's good from the feedback I've received. So as we look at this, let's kind of take a quick review. Now we are following down this RSI, guys. The RSI on this has just been a bear to look through. It has fluctuated. I want you to remember when you're looking at the RSI, remember it is what? Relative. Okay, relative to what? Well, it has been very relative to what it used to be. I mean, if you look at the pricing action in around, this is important that we cover this because we're approaching a point on the RSI. Okay, we're approaching a point on the RSI on the 1 hour. Let's flip over because we see a few divots in here. If we look at this divot, for instance, we got down to about 25 on the RSI, which means, way oversold. It's time for the price to go up. It didn't go up much. It went up 10%, and that's okay. 10% increments, but I wouldn't want to have leveraged in too much cash at that position back on the 3rd of April. I don't think you guys would have either. It would not have made much sense. So I just say this: beware of the RSI on this financial concern, on this investment. Just please do that. And this is all educational. You guys know that. This is for educational purposes. In terms of the RSI, we're approaching that now. It has a recent history of doing very well recently. Okay, recently it's done very well. The RSI has hit. Okay, but look how low we were on the RSI. Again, I'm going to bring that up on April 3rd. I mean, everyone thought this must be the heyday, huh? This must be the moment we're going to launch. What happened? We launched all the way up here. Okay, if you look at the equivalent up here, we literally launched what? We launched 10% from this level of an RSI. All right, so when I bring that up, it's relative. Always remember, and this is a great demonstration of the fact that the RSI, okay, particularly on Harmony One, but on all of your investments, is relative. Okay, look at the levels of the RSI. Okay, and typically, guys, if you get to 70, okay, if you get to 70, you can adjust these numbers however you want to. If you get to 70, all right, you're overbought. You're going to typically expect the price to go down. If you come down to 30, okay, you're oversold. That means the pricing action should go up. But I don't want you guys to look at this, particularly on Harmony One, and say, well, look at the RSI. It's about to be low. Let's go ahead and buy. You can. But just look at how inconsistent it's been. I mean, the relative strength in around here wasn't below 30. It was 37. The relative strength on this price moving in around here of a 30% gain or whatever exactly that is. We'll look up the exactitudes of that. But it was 42. The relative strength in and around here. Now this one was a big one. What was this, 50%? I mean, this was a big move. Let's just say the exact nature. It was 11.5 up to 18. Okay, time out. The RSI there was 46. What? That's what I'm talking about. It's relative. You can spend cash and lose money on the relative strength index because it's relative. It's not a concrete measuring device. It is not a black or white situation. Okay? What is a black or white situation is a strategy to be able to capitalize on an increased accumulation at lower levels within specific pricing events, within specific, if we want to say, kind of a pricing range here, okay, a pricing event within this range, okay. So as we look at the individual Fibonacci here, I'm more concerned with, okay, accumulation at lower price levels after this recent event. I'm more concerned with that to be able to capitalize on the upside and say, yes, we did get in. We're kind of on, if this is level 1, 2, we're at level 3 already on our orders. That's it. It means we have put in more cash already at this level. Now, if we hit the blue, okay, if we hit this, the golden pocket, if we hit that, just look at that. It's 1, 2, 3, 4. That's the 4th level down. All right? And we've doubled down every time that we have gone down a level. All right? So as we hit that, yeah, we're gonna double down again. Why? That maximizes our potential on the way up. It's not a gambling strategy, guys. This is a strategy. The double down approach is used by some of the most successful traders that you know of. I'm not talking about the guy who had a good year on the Wall Street corner desk overlooking the street. Wall Street, no, not him. The guys with the multiple billions and billions and billions of dollars invested that are playing heavily. They're playing heavily into what? The crypto market. They're ready to quote unquote double down here and there and there. Okay, so that's the approach that we use. I facilitate you guys learning about that approach, okay, with some other fundamentals, educationally kind of geared. That's just exactly what that is. It's not a gambling approach. It's not off the back cover of a back cover of a blackjack magazine. It's just not. All right, it's an institutional level of, let's say, an institutional approach or level of strategy that's applied. So what we would like to see, let's just review. We saw this beautiful staircase on the way up, walking up the stairs. Beautiful. We have a retracement. Complications, Binance, you guys know that. I think CZ is going to fix this, by the way. He has a deal to feature the coin and to represent the coin in the interest of the coin holders. Okay? He has a deal to represent the interest of the coin holders, which is you guys. So this is a nice time that we talk about that. People get in trouble when they stop markets, when they limit withdrawals, etc. They wind up going, I remember the Robinhood guy did that to a few stocks. He wound up going to Congress. So he knows, they know, they've got a duty to you guys. They've got a duty to the traders as well. So I think that's positive that has been brought to light. So if we go through this pricing action and we go on the way up, we are increasing as these levels go down. We're at 1, 2, kind of our third investment level. Okay, if we get to the 4th, great, we'll double down. We get to the 5th, great, we'll double down. And we have enough in insurance on the downside, okay? We have enough in insurance here to go ahead and put that next level in. The question's going to be this. You have 2 questions right now. We know fully how we're going to be prepared for the next launch. If we break out of this to the upside, we're fully covered. 100% we're fully covered. Now, you may not get all your cash in, but you're already invested. You've put in 0 at the top in the red zone. This is Fibonacci, predetermined. Okay, just the color elements of this and the pricing at the different ratios. At this top level, you saw a lot of people put in just a little bit of order, no problem. We broke through this next one. Let's go ahead and double down. People may be waiting for this 6-1. You're telling me how you're trading right now. And that's fine, If you have a significant amount of money, it makes sense for you guys to do this because you're going to compare it to your transactional fees. If the exchange is going to charge you a transactional fee with each of these and you're playing with a small amount of money, like a real small amount, it's not going to make any sense. You're going to pick out, I hate it because you're going to have to gamble and say, okay, I'm just going to pick out this right here. You may spend too much, okay? You just may spend too much. And I don't like to see that. Or you may not spend enough. You may not get to be a part of the price action, right? If you're set too low, well, you might miss the train. Or if you spend too much, you spent it all up here, and look at it, you could have got it down there. All right? You could have got it at 13.68. Well, you got it in at 15.2. Darn, you spent too much. Or you have the whole kit and caboodle. The whole kitty's going to be set up at 13.8, and dang it took off from 14.8. I never got in. See, our structured approach. Okay, listen. Our structured approach of layering in at different tiers, that guarantees that you're going to experience the upside. Now, maybe not with all of it, but you're going to maximize your probabilities of success in the long run. You can determine your own levels of interest as you layer in your investment on the dip. Okay, but you're still involved on the top. You still want to ride that up. You play that probability. Still on this second level, the tier 1, a little bit, yeah, tier 2, double down, tier 3. Then we're going to double down again, triple down. And it's double down of the entirety of the previous 2 levels. Okay, so that's why I say triple down. Essentially triple down of the previous level, but it's a double of the previous 2 levels. So double, triple down. You got it? Now, if we go to the blue, that's great. We're gonna double the entirety of those previous levels. Okay, first level 100, for instance. Second is 200. Now we're going to add those up. The next level, we're going to double that. That's going to make 600. 300 is going to become 600, okay? It's just a way, it's an approach for you to understand that you need to be accumulating a larger amount at the lower levels in order to maximize your potential for gain. Because you can always cover any losses up above with a larger position below. Because it takes a smaller move to the upside, and every incremental move to the upside, every cent, every tenth of a cent that's moved to the upside, while you have a larger volume position at a lower cost, is going to represent more profit, okay, exponentially than all of these previous investments. Because you have a multiple more at the lower levels. Do you understand that? You have a larger volume position at the lower levels, okay, at a better cost basis or at a better price. So your efficiency, your profit efficiency is dramatic as you get a better price and more volume. You achieve pricing efficiency. Okay, that's the goal, to maximize your profits. We have to achieve this pricing efficiency. If you want to be inefficient and just throw a dart at the board and, well, we want to get in here. Well, we're going to look at everyone, what's real hot today? I don't know. What's green? Let's throw a dart at the green. No, we have to know what the chart is saying. We have to know the levels of support. We have to know the levels of retracement. We have to do our homework and be disciplined. Okay? So you see how this strategy is going to increase your price efficiency, right? Yeah, and you guys understand. I'm not gonna keep going through that. What you need to know now is, as this process occurs, it is occurring. It's happening exactly as planned. The contingent of it going up, we're covered. The contingent of it going down to this golden pocket area, we're covered. Now, if you want to tier in, and this is what we got to, if you want to tier in and do any kind of a differential approach between the top, let's say the top half, you can, if you want to enter in orders and you want to have a triple or a quadruple tier approach to this area, that's fine. That's fine. If you want to look to the left and say, I do see, quite a bit of activity. It seems kind of centered at, I'm going to go ahead and say, all right, London, it looks like it's kind of centered around this mid-level, There might be a move there. There might not. I'm going to tell you, there's not structurally a lot here. Listen to this. There's not structurally a lot here other than some previous activity. That's it. There's nothing structural here in terms of a key ratio or a key, really a key anything. Until you get down to, there's some price action, that's fine. Until you get down to the 10.5. When you get down to that 10.5, then things kick in. Okay, then you're hitting that overall calculated level. You may experience some turbulence in here. Maybe a bit more than here. Maybe not much more, but maybe a bit more. You may get a little glitch or two in here. You have some previous glitches in that area. Whereas here it was just straight velocity to the upside. Okay, I'm looking at March 20th, straight velocity to the upside. All right, so nothing was stopping you on the way down. That's relevant to the notion that we're planning 24 hours out. Okay, we're planning and talking about right now. If it does break through, if it goes up, sweet, we're involved. We're already involved here. Okay, orders on the books, increasing at the different levels. Okay, to achieve pricing efficiencies, maximize our gains. Yeah, get the lowest price we can, right? We have double this amount that's invested. It's ready to go in and plug in this teal area. All right? Hey, excuse me. There we go. It's ready to plug in. So we may have a 10% event. I would split this probably in and around the middle. Okay? I would split this in the middle. I would state when you get to this level, okay, when you get to this level of in and around 12.6, 12.7, 12.76 to be precise. Let me make sure I have this lined out with literally the scalpel. Let me just make sure that we are, let me pull this over here. I want to make sure I'm giving you the precise levels. There we go. Let's see what we got. Okay. I think we are on target. Yes, we're on target. Okay. So as we look at this level here, I'm going to say around 13 cents. I would anticipate some price action. Okay, some price action will occur. All right, that's the next level of investment. Now, if you say, well, I want to go ahead and I want to now tier that in. I'm going to tier that in. You can if you choose to. I'm going to leave that up to you because I want to see how the market plays out. I want to see what you guys decide to do. You may get another. We already hit at the 13 mark. We already hit 30%. You guys know that. All right. So that's a critical level. It has a lot of price action previously. If it looks like we're going down to 13 and we hit 13, I would say, yeah, it's going to bounce to the degree that you have orders in. You guys play that the way you want to. If you want to put the full amount in around 13 like you did previous heretofore, that's fine. The retracement event to 13 to me would suggest that we may be going down, possibly absent any news event, but we may be going down to the golden pocket. Okay, so I may hold off on the full amount up top and I may tier it in. Okay, so that I maximize the possibility of a news event. Maybe I draw this down into quarters and I make sure I accumulate not the entire full amount, but I kind of schedule this in. You understand? That 600, that next level, I schedule that in. It's getting a little complicated. You guys understand kind of a tiered approach within the full channel here. So that's what I'll state. The bottom line is this. If this is broken to the downside, it's not a worry or concern. It's a profit potential. With the double down here in and around the 13 period, you're going to see some pricing activity. I would state due to the bearish nature, it's probably going to be much more in and around this 0.618. That's the level people are waiting for. I believe people will play this 13 cents for potentially, say, the 10%, etc. It may go higher than that, all right? But they've probably tied up some of their money already accumulating in this zone. So it may not be as big of a push, and listen, it may not be as big of a push to the upside as we saw previously here on March 7th when you got between 30 and 50%. That just makes sense because you guys are involved in this area, and I'm not sure how many of you are really listening to having the double and the triple down and the insurance below. It's great if you are. It's phenomenal. It requires some money and some discipline, and a lot of discipline if it's less money. So it's asking a lot sometimes of traders to do that. It's a smart way to continue to trade and make sure that you're that you're going to survive in this industry, that you're going to be around for a number of years. So that discipline will serve you well in the long run. But I believe that your capital is involved here. So I don't anticipate, it's still a level though. You'll see the institutional versus you guys. Okay, this is why my approach is very critical for you to understand what I'm talking about and why. Because the institution, they're still going to see, okay, Binance, the big players, they're still going to see this retracement, okay, this specific level at the 13. They're still going to see that as valuable. possibly more valuable than the rest of what you've acquired because you're planning for the upside. And now we plan for that contingent, but at a light level. You guys paying attention? We plan for that contingent, but at a light level. Institutionally, Binance and the big guys, your whale crew, the whale crew is already planning for, well, that's fine. If we get hit back, that's a critical level here. The 13 sure is. Yeah, we got another critical level down here at 10.5. They're already playing with their dollars behind their dollars here, whereas you may be completely invested in and around this pricing event. Okay, that's why I'm serious about making sure you have this underlying insurance. You have that underlying amount of money that you want to go ahead and invest and rail in, increase your volume, increase your pricing efficiency. Okay, a dip in the price is an opportunity. It's an invitation to increase your pricing efficiency. Okay, that means you get more volume at a lower cost. That's beautiful. That's exactly what you want. So people say we don't want the price to go down. Well, it's an incredible opportunity. It's a great opportunity if you want to try and maximize your profits. I mean, the other jokers are out in town chasing anything that's green. We've already been through that, guys. I've already discussed that, and I'll bring that up again in terms of I do a small theory here that I want you to get through your mind. When you're looking at an investment, people wonder, why am I losing so much money? You may get a hit 1 out of 10. It may be good. But I bring up kind of an approach with, this kind of an issue here, this kind of a symbolic representation, I'll say. Imagine that this arrow is like a dog facing this way, all right? And imagine that this is the tail on the dog going up. We do not buy anything with a tail on it. All right, now maybe you want to get involved with a small amount of money. You want to throw something into something that's really hot. That's fine. That's fine. Let's just throw a little bit of cash into that. That's fine. But typically anything that has a tail on it, this spike in price, and I put this arrow here pointing to the left. That's kind of like the dog, all right? That's the dog, the front of the dog over here. You see the tail on that dog? Yeah, all right? We don't buy anything with a tail on it, okay? Anything with a tail on it, on top of it having a tail, you're going to do what? Well, you're going to pay a premium. I guarantee you're going to pay a premium from the exchange to get into it. There's a reason that they've advertised it to you. First of all, you're going to get a notification. There's a reason they've advertised it to you because you're going to pay a premium. Then you're going to have to guess when the top of that sucker is, which you're probably not going to be very good at doing that. You haven't done the diagnostics, or else you wouldn't have bought in the first place. This dog has a tail. It's going up. Don't buy it. Because on top of the premium, on top of you having to gauge exactly when to get out, you've literally only got your exit costs to cover you to make an exit at all. By the time that you would say, okay, I'm going to profit on this, you're not going to profit. In all likelihood, you're not going to. So don't buy anything with a tail on it. You understand that, okay? You get a notification that something has gone up. Ooh, it's exciting, great. They're going to charge you their fee at the exchange to get in, right? Yeah, they're going to make their money. This small little increase in price, they're going to make their money. Then you have to calculate, right? Exactly when you're going to wait, when you're going to do, etc. And what are they going to do? What are they going to charge you to get out of it? All right, so the possibility of you making money is very low. If you want to get into a hot commodity or a hot asset, etc., go for it. Just if it's got a tail on it, go in light, guys. Go in light. And I tell people, if it's a great investment, always remember this. If it's a great investment, you can put 10% of the amount of money that you want to put into it. You can make the other 90% that you wanted to invest. People never think that way. Everyone thinks, and I've talked with them recently around here, guys that have lost $250,000 after they talked to me, and I was like, I wouldn't do that. And I'm just, we're hanging out, having a discussion. Like, I got 900,000 in this stock. I'm like, it's going to crash. I was like, it's up that much, it's going to crash. Literally 2 days later, the thing goes through the floor. Guy loses $250,000. I'm like, well, you talk to me, you don't want to do, you just want to sell me on the idea, etc. It's like that's got too much positive price action on it. But literally, it's like that hype momentum. It happens to the best of them. It happens to the multimillionaires. It happens to the new investor. If it's got a tail on it, don't buy it. All right. We want good prices. We want to achieve that price efficiency. We want the lower price to experience the positive pricing trajectories. Okay. These positive movements. All right. The 30%. That's what we want. Now, if things turn completely bullish, we will make adjustments. We're not there right now. okay? But we're still going to be doing the fib retracement analysis. We're still going to be plugging in our acquisition strategy. So this is still phenomenal practice. As we acquire more, as the dip continues to dip, we leverage in larger amounts of cash, more at lower levels, okay? We're buying more at a cheaper price as this continues to dip. We're still involved at the higher level. If it decides here to retrace a bit, or not much at all, we're still involved on this slight retracement. We still experience the upside. And again, if it's completely bullish, if it is off the chart thing is going to the moon, we make adjustments. I promise you, adjustments on a strategy are necessary during that. Right now, we're doing a retracement. So we've covered the upside potential. We know we're acquiring more as this drops. So this drop only represents an opportunity to increase our pricing efficiency model, okay? To increase our profits. That's it. If we don't get a good price, we can't make any profits. So that's a good thing. This retracement's a good thing. And we did let you know. You guys know. We let you know that this would be occurring. Last night I told you guys. And it had held all day. You have to say, this thing held all day. And yes, I anticipate this going down. I anticipate it going down through the next level. All right. After this hold, that you guys know we're on the right track in terms of things. So you guys can let me know in the comments. The big questions for you are if indeed, and now I hope you're involved if it goes up, irrespective if you follow a strategy that's used by major institutions, big time traders. I hope you're involved if it goes up. I want people on this channel to make money. Okay, this is not the same scenario where I'm giving a specific price target and saying, bam, all right, this is going to happen here. Now, it may be a calculated event where I have pointed out the 10.5, this 10 to 10.5, the golden pocket. And we look at that in the future and say, well, I told you that was highly relevant. Now, in the context, we're going to get into the trading strategy because we have money involved. We're prepared for the upside. In the event that we experience the downside, the whales may not have necessarily been using this formula, all of them. They may just have a broker or a bot trader, etc., that at 13 they know it's a critical price retracement level. So they may see a pricing event. It may be similar, exact. It may be more or less. That's still an important level. The 13 is a big retracement level. And I'll tell you guys that at this retracement level, it does not assume, listen to this, it does not assume any kind of a scheduled accumulation during this level. That's not the way it works, guys. And that's crucial. If you wanted to save some cash, you wanted to increase, and you're going to bet on, and you're going to literally, go all out on the golden pocket, no. The level is, okay, the 13 cents. That's just it. That's the level that's recognized. That's the 50% retracement. It's not scheduled in. And scheduled in and scheduled in. That's not it. We're scheduling in like that on the accumulation basis. And you guys understand this. We are scheduling in because of the Fibonacci, because of the levels that are predesignated, preordained, okay, predesignated within the Fibonacci on this most recent trading price action, okay, trading interval. You guys understand that? There are no sub intervals. As we look at this tier, this next tier, this third tier, there are no pricing intervals within this primary interval. It is a one-stop shop, essentially. If you want to create a different dynamic, you're welcome to, in line with kind of what we discussed earlier. If you want to create different levels, do your own math, do your own approach. You can carry this approach into this other level. I'm more concerned that you understand right now that this is a pre-calculated level, this 13, as is what? Not the quarter of event. Now we do have some pricing action here, which could make it a little bit more messy, but it shouldn't be a dynamic level of support any much different than the 13. It's just not. If it's going to hit 13, in all likelihood, it's in and around that 12.5 from the previous action there, which is on March 21st. It's just it's very nominal. I'll say any difference is very nominal, very small difference. So I'm going to say that for the record again for clarity purposes, because we were saying, well, could we bring this down as you guys think, and I explore possibilities with you, could we bring kind of a tiered approach down into you acquiring a better price action in and around here? Given the bearish sentiment, you could make an argument for doing that. That's your style. Okay, given the fact if it were just in the near term on a retracement is bearish by the very nature of it. The overall trend is very bullish, right? So within the retracement dynamic, if we're assuming a further continuation of the retracement, then you may want to tier in here. If you're confident and you have the money, okay, and you're going to do the play toward the golden pocket, that's your decision. That'll be a nice story for you to tell us about and why you did it and to explain exactly what happened. Yeah, because you don't want to put all the money in here at the 13, even though it may hit at 13. I think there's a bigger calculative probability that it hits again at 13 significantly. At least what we saw here, 10%. Now, on the whole, if you're trading correctly, doubling and tripling into it, I believe, you're going to see more than 10%, excuse me. You guys understand that? More than 10%. So that's just the bottom line. You guys hit me up in the comments. What do you guys think about anything else that you're concerned about, or you're confused about? Is there anything else? I wanted to cover the possibilities. Since we're going down through the different levels, I need to cover this for you guys. You need to understand what's going on, how to accumulate, a strategy to accumulate, and that's just life. It's Saturday. I don't know. I hope everybody's having a great day and just enjoying. We were up late talking on some different things. I went up and just got up and kicked my rear end and went jogging anyway. Probably shouldn't have done it. Didn't sleep enough. Got out there and just hit the trail and the track. I decided, hey, let's do this. I just didn't sleep much. I'm like, I'm going jogging. So I've had a good day. Let's see. Hit me up in the comments. What do you guys think? Do you have any other questions? Let's see. Predictions by the end of the year. Good question. I'll do an analysis of that right now. Let's go. Shout out to Caleb. Hey, Caleb, what's going on? Appletini, shout out. Mr. So-and-so, Drone Guy, shout out, Drone Guy. I haven't seen you in a minute. What's going on? Appletini. Kenny Crypto, shout out. Shout out to all you guys, huh? We can go through all the shout outs and just say hello. Scotty C, shout out. Let's see. Curtis, Dimitri, you're back. What's up, brother? Drone Guy, Jimbo Khan, what's going on? Mr. So-and-so as well. You guys, shout out to all you guys. You're doing really well. Appletini, this golden pocket thing scares you. Oh no, what happens if it has a golden pocket and it just keeps crashing? Well, I always say, don't let your diamond hands burn a hole in your golden pocket. All right, I like that question. I always say, don't let your diamond hands burn a hole in your golden pockets. All right, because they essentially can. But what do you have to know? You have to know that you have more cash available to invest at the lower levels. That's the way this functions. And guys, this is not the way that I've decided this. This is the biggest cats on the street. And I'm talking about, guys, think BlackRock kind of money, all right? $3 trillion to $6 trillion, all right? That's the way these top dogs think, all right? This is a very advanced trading strategy. It seems very simple. It's very simple. We just essentially up our ante. If we have to go into that, we're gonna up our exposure to it. Absolutely, you have to cover the possibility for the loss, and you have to reaccumulate at a lower price. Now, the world is not coming to an end. The sky is not falling. To the contrary, news alert. To the contrary, let's go ahead and bring this up. To the contrary, what? Well, guys, the market is showing phenomenal strength, okay? So while we have Harmony One, which has a beautiful, beautiful story, right? It has a beautiful story, great technology, good management team. While we have all those dynamics together, look, the market is showing strength, okay? Bitcoin's back up over 60,000. It looks like we're going to have more of a bull run. It looks like we're going to be okay. What I do like that today, and I've discussed this ad nauseum on my channel, is Harmony One seems to be a pretty good hedge against Bitcoin, doesn't it? Yeah, it does. Okay, we're into multiplying hedge, kind of a derivative risk approach, but we take the risk from Bitcoin. We want to capitalize on that risk of it going down or not performing well enough. Both are a risk to us. Of it going down, that's a risk, loss of money, or it not performing well enough is a risk as well, because we lose out on opportunity cost and other investments, what we could have made in another investment. Bottom line. So we hedge or we try and find a better opportunity. That better opportunity for us is Harmony One. That's where we're at. So while the overall market, and I'm gonna say that gives money and juice. That gives the juice for this whole deal. Okay, the power is kind of like the electrolytes. That's the Gatorade for this whole thing to function. All right, that's the power. Okay, those are the electrolytes for the entirety, the energy components for the whole broader market. Now, Harmony One's in the top 100. I think it's beautifully placed within the top 100. Why? Because it's not a super kind of an upper tier, larger, let's say a larger, market capitalized interest. Excuse me. So that gives us more leeway and more growth potential, I believe, as we look towards the future. If you want to talk about a price prediction, I'll tell you, the group here, our prediction is to try and multiply our money by 2 every, I'm going to say realistically, every 3 weeks. All right? Every 3 weeks, we'd like to multiply our money by 2. That's what we'd like to do. Now, and you guys, if you've already joined the Discord real quickly, let me look real quickly. If you've joined the Discord, put a Y. Put a Y in the comments. Can you guys do that real quickly? Put a Y in the comments. Okay? If you've joined the Discord, it's a great group. You guys will like the whole group there. A lot of guys that have made a lot of good trades recently. Okay? This is kind of a Saturday deal. I gotta tell you, this is kind of like a Saturday midday, etc. It's just it's hot outside. I don't know. It's important information. I appreciate that. That is important information. I appreciate you guys being here. As always, you're the most loyal. You're probably the most loyal, smartest crew that we have. Look at this RSI, guys. Look at this. I'm gonna bring it up. I don't want to. Why? Because it just got to 27. I'm going to bring this up, and I don't want to necessarily create an event, okay, between the guys that are here right now. We're at 120 people, 120, strong investors. I don't know how many people are watching this by kind of a shadow element, but we are close. Let's max in as much as we can on this RSI, okay? Now, this RSI, this pesky little RSI, was at, and I'll tell you can go broke doing this. I wouldn't recommend it. When it goes below 30, we're oversold. It should skyrocket. That doesn't always happen. You guys know that. Last time it was at, and let's bring this up. Last time it was at 31, was in and around this area. We had maybe a move of 10%, maybe. Okay. Other times it's been in and around the same area. It hasn't been a huge, colossal move. It's been kind of in a consolidated arena that we can look at. It has been lower than that, and it has done better and worse than that. I'll say that. So this RSI, again, it's relative for you guys who want to get in on the RSI indicators. Just remind yourself this is relative. All right, and let's see. And it has pulled off of that. Okay, well, good. That's pulled off of that. We got to be careful. RSI, huh? So it's already back. Yeah, guys, you're. It looks like you're gonna keep. Let's zoom in and see what we're doing in the price action before I keep talking. All right. We have had the show, and it looks like people are starting to buy it. All right, congratulations, huh? Congratulations, you guys look like you're starting to make money. Is that really what's going on? No, it looks like we're on the. Can we get back to a normal? Dang it! Are you guys literally pushing that much money into the market right now as we're talking? If so, I'm literally going to have to go to a smaller increment here. All right. Well. Apparently, you guys have entered in at 14.7. You're at in around 15.4 now. Let's draw this back. This has got to be. Hold on, guys. Let's go back to the. I want to draw back to the 4 hour. This happens when you get into RSI. I'm going to go 3 month, 4 hour. Let me get back into our Fibonacci, and it looks like we have kind of an increase. Let's go into 1. No, it hasn't. See, this is why I don't play with the RSI. Do not get too involved in the RSI, guys. I don't want you making decisions based on the RSI. Now, we do have an escalation in price, okay? We have bounced off of this is critical, right? When we're looking at the RSI. I don't see, as I'm looking at the 10%, it was relevant, okay? As we're looking at the 10% versus the potential 30% on the RSI, on the previous intervals, it is important that we have bounced up. Now, this is on the hourly. I had gone to the 30-minute back from the 4 hours, so we're discussing overall trends, and it seems like I'm not sure any of you guys have any of you updated me in the comments that we have a movement in the price? That would have been nice. It's okay though. I don't expect you guys to update me. That's fine. I'll try and juggle 15 things at once. I'm decent at doing that, but you guys let me know. Say hey. You got reply to me so some red will show up or something like that. Now it looks like we're at 15.4. Okay. Now what have we done? We have gone into this next zone. This has been while we have been streaming. So it looks like people have decided to go ahead and level in a touch here. Okay, in and around this zone, they said yes, we're going to level in a little bit. Good job. That's normal. We're in discussing a trading strategy. What happens when you buy? It shows a level of support. All right. Now this person is loaded up. It's a good example because this person is loaded up in and around when they started getting in around the 14.7. They picked about a midpoint between this. Okay, and again, there's no prior activity in and around here to look at the 14.7. They just decided, okay, it's in that zone. It's in the zone to accumulate. Someone went in and started to accumulate. That's it. So as they decided that, I'll tell you one thing. They're prepared now for the upward trajectory. Yes, and we hit about that, not quite at the 30. It's good we did look at that because the lower levels, we looked at that level and it's about the 10%, whereas the lower, deeper levels, you may expect a touch more than that 10%. I'm going to get rid of this RSI because, guys, on this, it's so relative. It's literally potentially detrimental. I don't like playing with it. I don't like letting you guys know a buy or a sell signal. I don't trade on RSI, particularly with Harmony One. There's too much. The fibs are too strong on it, guys. So as we look at this, we have entered in and people have decided to buy. All right, they've decided to buy while we have been discussing this. And this is a little bit of a phenomenal event. It's probably tied in with people that have said, yeah, that does make sense at least. And I always say, you guys do your own research. Do your own research. Educate yourselves. We can present some ideas that make sense. That if you calculate the ideas, they're going to make sense. Okay, risk mitigation. Okay, lowering your risk, increasing your profits. Very simple. You want a lower price so you can sell it higher. That's it. It's very simple. And these are just calculated percentages within which we kind of diagram things out, intervals, and a tiered approach to investing. It's very easy. There's nothing complicated about it. We want more at a cheaper price. Beautiful, but we'll take a little bit at a kind of, a little bit more of an expensive price. We'll take a little bit then, in case it decides to go on up. We will cover the contingency. Since people have been accumulating, maybe it'll go ahead and go up. So we'll take a little bit, just a touch at those higher levels. Not much, just we'll pepper it in. Pepper in just a touch. As it goes back into this level, if you've already accumulated at this level, that's fine. You're just back where you were, no big deal. Now, if it falls back to this level, you don't accumulate anymore, I'll say that. If it falls back to this level, you don't reaccumulate, all right? Unless you bought and then you sold, and then you're gonna blow your account up. You're gonna go to zero on that. So that's reasonable to expect that this would occur in and around this level. I'm going to attribute this, and you guys will remember, we'll attribute this to this show. People saying, yes, you're in this tier, and people saying, well, I want to be covered for the potential of an upside, right? That's just when it happened. That's essentially it. You guys make sure you alert me on this price. So if we watch the 5-minute on this, you guys are going to start buying and selling all the time. You're going to waste all your money. So we have this purposely pulled out. I will keep a good radar on this. I might get a little ticker on the side here so we can all see that price and try and blow it up so we can continue to take a look at it. And we're building the channel, guys. We have a few thousand subscribers. We appreciate you being here. Turn on notifications if you could. We appreciate all that. Hit the thumbs up button just to let us know you understand what's being said, because I literally like that as a confirmation between us that, yes, you understand what is being discussed. It's real simple, but I need that confirmation from you that you understand what's going on, because not everyone does. Now, listen. I want everyone to tune in. Tune in Tokyo. Tokyo is a nice city. It has a Tokyo radio towers, and that's why they say that, That's an old phrase. Tokyo is a nice city. Shout out to anyone from Japan. Now, as this pricing switch here occurred while we are on the air, okay, while we're streaming live, as this pricing has occurred, I just got, you're gonna understand the function of a market maker right now. I just received, okay, an alert from crypto.com. One is up 5.39%. It is now 0.15687. All right? Did anyone else get an alert? I'd like to know, any of you in the chat, did any of you get an alert? Let me know if any of you got an alert. Just type in alert if you want to. Type in alert on the chat. Let me know if you got an alert. Because this is telling me Harmony One is, now this is the function of a market maker. They have pushed out notifications to potential buyers, i.e. me and whoever else is on their platform. This is on crypto.com. Decent platform. You have to beware. They just advertised to me into however many other thousands of people, maybe tens of thousands of people. They just advertised, okay, this at a higher price. There's movement on the stock. Now, you guys know we've been looking at this. I guess the reason we missed it is because on this here, we're looking at the right-hand side. We're looking at our stocks. We're looking at all this stuff. Where, I haven't seen that. No, in fact, yeah, let's look. Let's look at the market makers versus my software. All right, and the reason for the confusion: market makers versus the software. Software showing it down 316. No problem. No change, no big deal, no big effect. Look at what the market maker took advantage of and decided to target us with. Now his role, his duty is to take in orders, okay, for purchase, and to liquidate those as soon as he can, to create a fluid market, okay, between the buyers and the sellers. He creates that. Crypto.com, Binance, etc., they create that dynamic. How do they do it? Well, they have people on their exchange that want to enter in. All right, like what? Like the ones that were watching this show, or the ones in the general market that said, yeah, that does make sense. All right, if it does go up, we want to be covered at a lighter level. So people may have gotten in, not just on this show, just that's normal logic, right? If they get those orders from users, then they're going to push out the news to potential buyers. All right? That's how they create a market. That's how they facilitate the market and create volume. Okay? But that does not mean that this is a pricing event that we need to jump onto. That's why you need to be careful. I need you to pay attention and be careful. When you receive a notification, you need to beware. Okay, and I always say, don't jump on a train that's left the tracks. And I got this from a colleague, I guess, out in overseas, Middle East. You'll land on the tracks. It's a familiar expression. Don't jump on a train that's trying to leave the station. You might wind up on the tracks. It's nice to be on the bullet, right? Be on the rocket ride. Sure. We do that when we have a target price, a critical price that we understand. Okay. And there's just too many critical prices. There's too much planning. Other than a little bit of peppering in, a little bit of acquisition here and there. And we are at a tier that's tier 1, 2, and 3. So we've doubled down. We've become increasingly heavy at these levels as the prices continue to drop. We'll become even increasingly more heavy, okay, as we reach this 0.618. And now someone may have just jumped the gun, or it may be a part of their trading strategy. I'm not going to answer for them, but it's a nice movement within this third tier down. We'll get to a heavier tier in the blue zone. Okay? A heavier tier in the blue zone. Let's see what we can do. Yeah, that is true. There's 120 people in here and 47 likes. That's why I say if you guys understand what's being talked about, because that will assist me in telling you more about the strategy. Because I used to own a private hedge fund. Okay, you want to talk about doing well? Yeah. You want to talk about detailed, disciplined work? Yes. Okay. So that's just the truth, my background, etc. So yeah, hit the like buttons. Go ahead and launch into that. What I'd like to do is give this a little bit longer and maybe come back later at night. So you guys take care of yourself. Enjoy yourself. Let's watch this price activity. You understand the strategies back and forth. Okay? Hit that like button. Make sure you get into the Discord. Let's pull into the Discord and let's watch this price action develop a bit for the day. And spend some time with your family. I don't want to take your whole day up. Spend some time with the other relationships and things that you need to invest in. This is London.